you might have heard this somewhere, but the Dow closing above 30,000 for the first time ever yesterday. Now, the index on pace for its best month since January of 1987. And if we can close above 30,164, mark that in your head, in the next couple of sessions, the Dow will officially post its best month since January of 1976. The record before that, I have absolutely no idea. All right, the Dow still firmly positive on the year. Of course, big tech has been a big part of the story. But will 2021 bring in a new hot trade along with a new year? We're joined now by Eugene Profit, CEO and portfolio manager of Profit Investment Management. And covering the fixed income angle is Anthony Woodside, senior trader and portfolio manager for global fixed income at Neuberger Berman. Eugene, I'll start with you because every Dow stock is higher this month, but Apple and Microsoft, red hot names for years, are actually near the bottom. Some of the FANG stocks have been well underperforming. Do you think it's a short-term anomaly, or are you advising your clients that, hey, you made your money in tech, there are better places now to put your coin?
Good morning, Brian. Yes, I own both Microsoft and Apple, and I'm still going to hold them. I think that it's not surprising because of valuations that those stocks have taken a little bit of a pause, and money has rotated to some of the lower valuation type stocks going into 2021, right? So even though they have not performed as well in November, I think that in 2021, you're still going to be well rewarded for owning Microsoft and Apple. I think one other thing that's showing up quite frequently is even though you have positive earnings announcements and names that have performed very well, you're starting to not see stock performance from those names as readily as stocks that have performed less well. Take Best Buy as a case in point versus what's going on this morning in Nordstrom's. Online sales at Best Buy were phenomenal. It did very well. The day after, the stock traded down, even though they didn't give guidance. You saw the same thing in the technology space. So I'm not surprised that it's taken a pause. I think it's actually healthy. And I do think that they will outperform sort of the valuation-less stocks in 2021.
Yeah, everybody's filling up their homes with flat panel TVs right now. Anthony, but here's the thing. I tweeted this out the other day, and I meant it sort of tongue-in-cheek, but I was trying to make a point. The stock market's up. The TLT, the bond market ETF, is up. Home prices are up. Cryptocurrencies are up. Lumber prices are up. Commodities are up. I mean, everything is up, and yet you have millions on Main Street unemployed and an unsure path for a second stimulus plan. Has the global market as a whole gotten ahead of itself at all? I mean, market for everything.
Yeah, I mean, definitely we've seen strong financial market performance here. But I think what you're seeing, the market developments that you're seeing are largely predicated on an array of positive news. First of all, we've seen the positive vaccine news. We have 3 credible treatments that might come online in the next few months. So I think that what investors are now focusing on, they're pivoting towards the reopening theme. And that's why you've seen sectors, not just in stocks, but in fixed income markets as well, that has been characterized by an outperformance of COVID-disrupted sectors. So I do hear you on the disconnect between Main Street and Wall Street here, but we do think that better days are ahead, particularly given the vaccine news that we've had in recent weeks.
Well, I guess, Anthony, let me follow up with that, okay? We see money market funds, $1.5 trillion with a T globally, 26 billion coming into equity ETFs last week alone. Where is the money coming from?
Well, what we've seen is that you've seen a lot of investors that had money parked on the sidelines here. And then you've also seen a paucity of yields around the globe here. So now investors are focused on the fact that they want to find higher yielding alternatives. The left tail risk that we had, basically not knowing on how the pandemic was going to evolve, some of that left tail risk has been removed, and that has given investors more confidence to start to go into more risky asset classes here as well. So I think that's what you're seeing. You're seeing investors become a little bit more confident on the outlook, given that vaccines are set to come online here.
Yeah, and Eugene, listen, I do wonder that what 2021 will bring into 2022. Obviously, hopefully, we'll get the vaccines. We'll sort of come out of this. People spend their money on travel, things they would not or could not spend money on this year. What are your clients telling you about their plans? They're probably worried about taxes. a bit. They've made a lot of money in equities, but they're looking forward to the future. What are their big worries and thoughts right now heading into the new year, which can't get here fast enough?
Right. Well, they're concerned about being left behind because sentiment is so positive that when you run a diversified portfolio with risk control, you're not going to participate in the 500-degree Tesla increase because you're going to be trimming that stock all the way up. And if you stick to your valuation discipline, you're going to be selling more of Tesla than you're buying, even though we still own it. So let me give you a counterpoint, Brian. And I know sentiment is so high. The last time it was this high was February of 2020 and then December of 2017. Both times we had a 20% drop. And even though investors are looking through the first quarter of next year onto a positive pandemic resolution, I think that if November's the best month since January of 1987, let me remind you what happened later in 1987 where you had a big, drop in the market, right? I'm not pretending that, but I think that sentiment is priced to perfection. I think valuation is priced to perfection. And so I'm telling my clients to maintain risk control discipline. Let's get these portfolios rebalanced and barbelled going into 2021. Appreciate what we got in 2020, surprisingly, but let's make certain we don't, lose a great part of it trying to capture all of it in 2021.
Shepard Smith here. Thanks for watching CNBC on YouTube.